Good morning to everybody, and I think it's useful if I start presenting shortly the organization I represent. UAPME is the employers' organization representing the interests of European crafts, trades, and small and medium-sized enterprises in the European Union. We are a recognized European social partner, and as the European SME umbrella organization, we incorporate about 70 member organizations from 34 countries. In total, we represent about 12 million enterprises, and these 12 million enterprises employ about 55 million persons. If now to SMEs, the question is asked if simplified, common, and high quality accounting standards tailored to the needs of SMEs are the way forward, the answer is certainly affirmative. It is common knowledge that UAPME as representative SME organization has been very outspoken and active in this field in the last years, and which was quite controversial. But everybody dealing with this file also knows that the call for simplified accounting standards is not interpreted by everybody in the same manner. So, what does accounting mean for SMEs? And especially the smallest ones, because the smallest ones represent 90% of all enterprises in the Union. First of all, it is important that the principle guiding the discussion, and this is a message to the Commission, does not focus only on simplification, but also on the relevance to SMEs of financial reporting needs vis-à-vis large listed companies. The issues associated with simplification tend to focus on costs, whilst issues focused on relevance are concerned with the benefits of financial reporting and in particular users and their needs. One of the problems of the accounting directive and the requirements for incorporated companies in the EU is that in a significant number of SME entities, the owners are also responsible for the management and the leadership of the entity. For such companies, the need for financial reporting is particularly driven by the need to evaluate the position of the company, to enable the development of a future strategy, rather than the need to report to a wide range of users on historical performance or financial situation. In conclusion, assimilating accounting in general to an administrative burden is contrary to business reality and a dangerously misleading assumption. Robust accounting is essential to business management and growth, to the proper functioning of markets, and to the sound development of a sound and sustainable economy. A harmonized accounting framework is essential for the single market, and more national regulation could enhance fragmentation and exclude micro-enterprises from the single market, thus being a dangerous development. UAPMA has always advocated for the full application of the think small first principle, also in the simplification of accounting standards. The more the legislator, the Commission, adopts the think small first principle, the less the enterprises will ask for simplification or for exemptions. Ladies and gentlemen, the recently published action plan on building a capital market union, there the Commission put forward some measures to make it easier for companies to raise capital on public markets. And more concretely, I quote, "The Commission will also explore with the International Accounting Standards Board the possibility of developing a voluntary, tailor-made accounting solution which could be used for companies admitted to trading on SME growth markets." This sentence is a little bit worrying us, as when the IASB is mentioned, the phantom of IFRS is also around. And the lessons learned from the IFRS for SMEs should be fully taken into account. And I'm ready to explain this. First of all, the view that IFRS for SMEs allows international comparison of financial statements and that it may lead to increased access to finance, reduction in costs, increased trade, and increased levels of cross-border mergers and acquisition activities has always been contested by my organization as far as no real evidence has been given. And we have not yet seen this real evidence. Secondly, we have to avoid the approach used in drafting IFRS for SMEs. Indeed, the starting point remained fundamentally wrong, as it was a full IFRS which has been simplified. This was done by skipping some standards which are not applicable to SMEs, or by introducing procedures of fewer options, but the basis remained always full IFRS. In addition, the full IFRS were drafted from the point of view of next enterprise, which has in the first place to report towards its stakeholders and the financial markets. Consequently, this is a completely different approach than what accounting in an SME is about. Indeed, apart from the management, the stakeholders of SMEs, employees, customers, suppliers, credit institutions, leading companies, creditors, and public authorities have different information needs. The IFRS for SME standards, on the other hand, which start from full IFRS, which are oriented towards the external stakeholders, are exclusively conceived to give information towards third parties. It is not designed to improve the exigencies of reporting. Especially the needs of SMEs themselves are not taken into account. So our message is clear. First of all, the upcoming exercise with the IASB cannot start from IFRS or IFRS for SMEs. IFRS for SME standards remain too complex. In brackets, somebody has counted 230 pages. It is difficult to imagine how IFRS for SMEs project is compatible with the objective of the European Commission to reduce the administrative burden for SMEs, so the parallel running Timmermans exercise. What we need is a bottom-up approach. The think small first principle, meaning starting from the requirements and the needs of SMEs, has to be taken into account. So IFRS for the solution of SMEs can only be a source of inspiration, but not the blueprint. Thirdly, it cannot be solely be an exercise between the Commission and IASB. I would like to remind that in its opinion on IFRS standards, the European Parliament, in the so-called Radwan report of 2008, has pointed on the non-transparent way of working of the IASB. In addition, Europe does not have a say in it, and there is absolutely no European control about it. The IASB does not consider different industry interests and focuses mainly on the creation of a standard which is as close as possible to the rules of the US GAAP, instead of developing proper European law. So, all the stakeholders have to be fully involved, especially the representative SME organizations, and my organization is fully engaged to participate in this coming work. Let me conclude. It goes without saying, but the experience with the micro-exemptions has made us very careful. How important it is that rigorous impact assessments are carried out, including the assessment of the benefits of financial reporting, as well as cost and administrative burdens at the end of the process.